Hello there. Welcome to the show. Welcome to the pod. I'm Mitch Goldberg with the wealth management firm Client First Strategy. Thank you for joining me. If you like what you see, you don't like what you see, you're watching, so please give it a thumbs up. If you have any comments, any questions, ask me in the comments. Replay or in the live stream, either way, I'll see the comments. I'd love to answer your questions and interact with you. You are welcome to call me directly as well. I know not everybody wants to be in comments, so feel free to reach out. So 100% plus on tariffs kick in tonight at midnight, plus tariffs on the rest of the world, 10% minimum, but many countries much higher than that. What's going to happen? Well, stocks gave a massive head fake. Nice up day, started up strong in the morning, up 4 or 5% on the major averages, turned around to everything's down across the board. People are nervous. People are worried. That's what we're going to talk about. And I have a couple of other issues I want to address because the work we're doing here is important. And I have an audience and some gravitas. Thank you very much. And I want to make sure we put this to good use because all of you are valuable and all of you have an opinion, which is very valuable as well. So let's get to the intro, and we're going to have a really good show. Thank you so much for joining me. I'm Mitch Goldberg. We're just getting started. 100% tariffs on Chinese goods at midnight, but just a massive amount of tariffs all at once. Customs have to collect this. I texted with a friend of mine. He owns a pretty big trucking company. When I say trucking company, he's got like 60 plus 18 wheelers, and they run their business out of Newark because there's a major port there. And I just want to share what he said about the texts. Okay. So I asked him what he sees, how he sees things. What do you see? Here's what I asked him. What do you see in changes to freight volumes? Looks like a surge to get ahead of tariffs, followed by a big drop. He wrote to me this, okay? It's all over the map. And because of so much uncertainty, people can't even make a decision because you don't pay tariffs when you ship the goods. You pay them when you actually clear customs stateside. You can ship something today with no tariff, and if they implement the tariff the morning the ship gets in, you have to pay it. A friend of mine runs a company in Suffolk County. They buy specialized lenses for $10,000 a pop, and now they're $14,000 a pop. And with 100% tariffs on Chinese goods and 40+% tariffs on other Asian countries, 10 to 20% tariffs across the board from Canada, from Europe, tariffs from Canada and Mexico. How could you say that things won't get more expensive? Okay, so I want to make sure I cover all my bases here. So I had a conversation with a friend of mine, someone I love and respect and have known for over 20 years. And this is a very bright, highly educated individual. And I think sometimes, we feel a certain way. Like I feel that tariffs are a really bad thing. And I am convinced that this tariff policy will end in disaster before it's, and then it'll be reversed. And it'll take years and years to undo the damage. That's what I believe. So if somebody is counter to that argument, I'm mad, and I don't like you for saying, no, I'm not kidding. I don't want to be like that. Maybe negotiations will happen. Now, the White House states that tariffs are being negotiated. Countries want to talk about tariffs and negotiate. Maybe something good will come out of it. Maybe enough countries will start to fall in line. And in 3 months, we might have to say, let's eat some crow. These worked. We don't know the future. We have firmly held beliefs. We have history. But if there's anything that President Trump has proven is that using history as a guide has not really been a good strategy. We have experts. We had in 1930, Smoot-Hawley, 1,000 economists signed a letter asking President Hoover not to sign off on those, but he did. It was a disaster that contributed to the disaster of the Great Depression. But times are different. Well, we're much more dependent on foreign imports today than ever before. Now, I hear the arguments for tariffs. It annoys the hell out of most of us that we don't make necessary pharmaceutical products, metal products, engineered products here. So if we need them, we could get them. But as the Great Recession, as the COVID pandemic showed us that we have trouble with supply chains and then we're SOL. So I could see a defensive need to make more products here. I would like to have more money in the United States. And I've said this before. I don't argue that tariffs are good or bad. If there's a country that squashes minority rights or women's rights, or a country that does harm to us and our allies, bad actors, tariff away, my friend. Tariff away. I understand that. So there is some good in tariffs. You could use tariffs to try to motivate other countries to come along with your thinking, to come along with your view of the world. And that's what they're for. But if, we're going to put a tariff on coffee, well, we don't really make coffee in the United States. A little bit in Hawaii, but nothing near like what we use as consumers. We don't make avocados. We don't make a lot of things here. I'm not saying that this is all about avocados, so please don't come at me with like I'm being so silly just talking about avocados. There are minerals and all kinds of products and resources that we import. There are basic chemicals that we import. So most oats, like something like 90% of all oats used in cereals and other grain products come from Canada. The point I'm making is it's one thing to tariff a foreign country because we make the same product here. Maybe we can't make it as cheaply and we're competing against government subsidies of China. So we put a tariff in to make the competition fair so that we could have an industry. That I could also understand. But if we don't have a suitable replacement for the products, then it doesn't really achieve the goal of making our products more competitive in the world with American consumers. So we don't produce enough stuff here. Let me say two things. Globalization. And I want my friend to hear this because I've talked about this last week. So if I want you to watch all my shows because I just because I'm anti-tariff does not mean I'm making, arguing with your view of the world or your politics. I see tariffs as a bad thing. Now, Ken Langone and the guy who owns Citadel, his name evades me at the moment. These are two, they're called mega donors to Republicans. Okay, Ken Langone, you've heard of NYU Langone in New York City, but Ken Langone is the co-founder of Home Depot. And the other guy from Citadel, the biggest hedge fund, Griffin, Michael Griffin is his name. They're mega donors, and they are screaming up and down how bad of an idea the tariffs are. Elon Musk, reportedly in the Washington Post, and sparring publicly now with Peter Navarro, he tried to turn around Trump on his tariff policy. He couldn't do it, but he tried. So now he's fighting Navarro. By the way, the thing that could bring this administration down is the infighting. Infighting is the bane of all organizations. So they should probably keep that private. So who do we have out here? I see a few people. Jerry, good to see you, my friend. So I'm gonna have to go back a little bit. Free trade, NAFTA, under the Clinton administration, letting China become part of the World Trade Organization, favored nation status. That's what I'm looking for. Uh, that that helped gut industry in the United States, opened us to competition, and it basically said whoever can produce at the lowest price wins. Whoever can't produce at the lowest price, that's us, loses. And it gutted industry, not just the middle of the country, but places like upstate New York, a lot of Pennsylvania, all right, as well as a lot of the middle of the country. So I hear what you're saying, that free trade has been a curse and a blessing. It's made the nation richer, but it's made people poorer. There are now 2 or 3 generations of people in, let's call them, red counties who are suffering from the effects of globalization. I believe that globalization and shifting production to lower cost domiciles would have happened with or without NAFTA, with or without giving China most favored nation trading status. All of these would have happened. It just would have taken longer. The changes wouldn't have been abrupt, and people would have had more time to adjust. It's almost like the opposite. So I just want you to know, I understand the arguments here. I'm not making light of this. I'm not being dismissive. And this is the talk that I had with my friend today, and I want you to know. I know I've talked about this a lot of my live stream. It wasn't just, one thing on fraud. It was, you have to take it all together. But the abruptness is what's happening now with the tariffs. It's like the reverse of World Trade Organization, the reverse of NAFTA, the reverse of most favored nation status with China. It's the abruptness that is freaking people out. Can the economy handle it? We want manufacturing to come back. We have a giant deficit. I get that. I saw Congress trade rep was Greer today being grilled in Congress today. But even one of the Republican senators was grilling him too and said, "I don't agree with this. With this policy." It's not just me, but the bottom line is it's the abruptness of how this is taking place. We're not going to be able to have companies build factories here in the United States overnight. It takes years. And if everybody's doing it at the same time, like Apple was talked about today in the White House at the press briefing today with Carolyn Levitt. Is that her name? Caroline Levitt? Just call her Levitt. And she said that's why Apple is dropping such a big chunk of change, $500 billion in the United States. But if Apple's building factories here, and now Caterpillar's building factories, and auto parts manufacturers, where are we going to get all the materials? Where are we going to get all the machinery and the people? It's the abruptness. And I've said this on the show before. Maybe raise tariffs a little bit here and a little bit there and do it gradually over the next few years to raise the money from the tariffs while keeping the incentive on to build more here and making more of an incentive for American companies to repatriate manufacturing. It's the massive abruptness of the tariffs. Now, I'm sure that the Trump deal-making brain feels that you got to hit him hard. You have to hit him hard right now. You have to hit him hard right now to make it work, to incentivize companies to change. Because if you're too gradual, it's not going to be fast enough. It's not going to happen. But if you're too fast, a lot of countries and companies will say, I'm talking about companies now, they'll say, why would we build a factory because of a tariff when we know that the tariffs might go away? Remember, tariffs are not permanent. They're not part of the Constitution. They are at the whim and pleasure of the president, of which our president could change his mind. He could get tougher. He could have a spur of the moment. Well, we're going to, raise your tariffs 50% now, or we're going to cut theirs 20%. Like, he could say anything. And it's well over 80, maybe over 100 pronouncements of tariffs now. So it's really hard to make the case for that. Plus, I'll show you some more stuff. So I just want you guys to understand that it's the tariff. We have lots of other things and more important things to debate. But I'll give my friend the benefit of his wisdom. He's about my age. He's got wisdom. He's a businessman. Maybe the negotiations, maybe these negotiations will happen. And maybe in 6 months, there will be enough good news that we will have gotten something good out of it. It could happen. I hope it happens because I want the best for the country. I've had a good career. And part of the reason I've had a good career is because the economy has grown over the last 35 years. I started my career in 1990, late 89, and I want it to be a good career continuing. I mean, imagine if the stock market went down for the last 35 years. Who would have a career in finance? So I understand, how good it's been, and I want that to continue. We'll see if there's a method to the madness. My belief is it's a problem. It doesn't work. It's not worth the cost. Others say Trump is playing 3D chess while the rest of us are playing checkers. I've heard that expression a couple of times. My friend used it, and maybe we don't see the bigger picture. Maybe we shouldn't take our cues from the stock market. I mean, investors, I actually believe that policymakers should not take into account the stock market. It's the job of investors to discern what they should invest in, what they should not invest in, what their risk tolerance is, what their time horizon is. So I don't think whoever you want, Obama, Biden, anyone, Trump, I don't think anyone should be making their decisions, presidents, based on the stock market. I think they have to do what they think is best for the economy long term. And investors have to grin and bear it. Remember, if you're an investor, you took the risk. Geopolitical risk is a big thing. So we need to be patient and see how it works. Maybe it works out. Let me show you a couple of things, okay? Let's talk about today. Anyway, I hope I made the points clear. And I love everybody, and well, I don't love everybody, but I have my feelings. You have your feelings, and I want to be open minded to other people's points of view. I think the tariffs are a disaster. Others think, I think the tariffs are a disaster. Other people think they're going to be good and work. We shall see. But everybody's digging in their heels, and I'm looking forward to seeing how it all plays out. I'm hopeful, but I'm not hopeful based on anything I've ever known or anything I've ever learned about markets, math, and economics and history. I'm hopeful just because I'd rather hope that things work out than they don't. But that's the only reason I'm hopeful. All right, let's talk about the market, okay? Year to date, the S&P 500 is down 15%. By the way, you cannot invest directly into an index, but you can invest into a security that tracks or mimics an index. In the last year, the S&P 500 is down over 4%. So anybody who invested a year ago is actually now down. We haven't seen a rolling 12-month period that's down in a long time. Okay, Prayer City says, thanks. Well, thank you for watching. And we've got a couple of new subscribers on YouTube. I don't give you guys enough of a shout out. So everyone out there who watches me and subscribe to my channel on YouTube, I greatly appreciate it. But this is going back a year for the S&P 500. Okay. Let's look at the year to date. I have two screens. Let's look year to date. This is the S&P 500 year to date. Now, again, should we be guided by what the stock market is doing? Well, we better not change course. We better just keep piling on the debt and keep the government spending going because, we don't want to hurt the stock market. Of course, eventually, if the debt blows up in our face, the least of your problems is going to be the stock market. I understand that. I want something done about this. We talked about Doge, my friend and I came up. We covered a lot of things. It's the abruptness of the cuts, not so much the cuts. It's how quickly it's being done without giving us mere mortals a chance to adjust. That's my main beef with it. All right, but let's get back to the matter at hand. Let's take a look. This is year to date. And This is in the 1 day. This is today, okay? And we had a nice up market. See that? I don't know if you could see that little blue line right over here. That was the rally. We rallied. We went up to about 5,200, 5,260 about, and we finished at 49.58. We already touched 3%. We already reached 20% drop in the S&P 500 on an intraday trading on yesterday. Then the market turned around and we were out of bear market territory. But bear markets really are based on closing prices. So we are just a fraction of a percent away from a 20% correction in the S&P. We hit it, but we didn't the market the S&P didn't finish at its bottom. It moved it up a little off the low of the day. So we're right there. So on a closing basis, we're not at a 20% correction yet, but I think we could get there. Well, obviously we could get there. It's just it could be a day where we're that close. All right, Tom is out here. Have you ever seen the VIX over 50 other than today? Yes. Yes, I have. During COVID, it went above 50, and during the Great Recession, it went way above 50. So I have seen it before, but it's a pretty rare event. Typically, greater than 40 indicates oversold conditions. The timing is not quite right for a rebound rally. That's part of the conditions, but we could see it. You really never know. I mean, we could be an announcement away from a rally. Maybe China and the U.S. will come up with some kind of back channel agreement, and we're okay. The thing is, the way President Trump looks at the tariffs with China is this. He looks at the trade deficit with China as a tariff. He doesn't say, well, China's charging us 10%. He just looks at the deficit and says, that's a tariff. No, it's a trade deficit. So how we balance out a trade deficit overnight of such magnitude is beyond me. Now, maybe China will say, we will increase imports of American goods by X amount over the next couple of years and work on that. And they'll have some kind of agreement to shrink the deficit. But if we got something like that, I think that would send the market up a lot. European Union said, well, how about we just do 0 and 0, zero tariffs, let's do it. But the U.S. said, no, it's not good enough. So I'm wondering, what do we really want if that's not good enough? Oh, it's the trade deficit. So Europe has to pledge to import more American goods. But if we get some kind of pledge, doesn't have to be super strong, it could be a mild number. I think that could rally the market. So we could get something. And this is why we're still in it. This is why, we don't just sell every single stock we have and wait for that big pop in the market. We still have to see if we have a recession. Could we have a recession? Yeah, we could. I've always said this. We could have a recession at any time. We could have a correction at any time. We could have a bear market at any time. When these things come, it's like that old expression, everything's okay until it's not. I'm reading the tea leaves, and I've made adjustments in most of my clients' accounts to get ready for a correction and a bear market, and we've done it. If the market goes down a lot more, I will wish I have had done more. If the market recovers, I will wish I have done less, but I can only do my best with the information that I have at the time, and then I adjust based on new information. The problem is the new information is coming at us all so quickly, and you really don't want to react to every little piece of information. You really have to be careful and decide what's important and what's not. Give us a like if you don't mind, Tom. Prayer City, if you don't mind, please give us a thumbs up. It would help the cause and help other people see the live stream that we're doing today, and just good for the cause, good. What's good for the cause is good for all of us, right? Let's take a look at this. Come on. Sometimes the screen share gets stuck. Oh, that's not what I wanted. Okay. Well, I'm just going to go through a couple headlines, okay? Morgan Stanley says the Fed won't cut rates until next year because of tariff effect on inflation. Right now, the street's expecting 4 rate hikes. Morgan Stanley says none. None of this means anything, by the way. The Fed could cut. They might not cut. as conditions develop, they'll do that. Okay. By the way, thank you, Tom. I just saw the light come in. Thank you very much. So, but if the Fed's not going to cut, it kind of takes away a pillar of potential strength for the market. I think Trump is going to start leaning much more heavily on the Fed to cut because he's going to want some kind of relief for the economy, like like some kind of insurance for the economy to help prevent more downside to the economy and the stock market. He's not going to get it though unless the Fed sees lower inflation. Tariffs, even though tariffs are arbitrary, they cause prices to go up. Usually prices go up because of supply and demand, too many dollars chasing too many goods or too few goods. There's all kinds of things that could affect inflation. Shortages, floods, weather, there's so many things affect prices. So do tariffs. And tariffs are a price hike. Okay. I think they're a tax. Or let's not call the tariffs a tax. Some people don't like that. Well, it's certainly taxing on your wallet. And maybe we should all just not complain and say, all right, a couple of months of pain to fix the country so that 10 years from now, we have a much stronger country economically. And our economic strength is pretty darn important. All right. I wonder if this works. Yeah. Okay. Here we go. We're back in the screen share. Trump trade fight. Customs starts collecting new tariffs on imports from 86 countries at midnight. I'm just going through some of the headlines. Trump says U.S. is doing very well with tariff deals. I hope so. Canada confirms plans to implement retaliatory 25% auto tariffs. That's on tariffs that are not part of the U.S. MCA. All right. Is that the name of the USMCA that replaced NAFTA, right? If any parts in a car are not made in North America, the components that are not made in North America will be taxed 25%. So if a car is a GM and it's got parts in it from Mexico and Canada, that's great. But let's say it's a transmission from Germany, well, the cost of the transmission will be tariffed at 25%, not the entire car, just that part that's from Germany. Okay. But it's still a tax on an American car, a tariff. Okay. What else? Analysts scoffs at making iPhones in the USA. I don't think it's a thing. I don't know if Apple could make their phones in the USA. There's no doubt about it. It's just that are you going to be paying $400 or $500 more for an iPhone? That's the question. But if Apple does make phones here, they're not going to be making them with humans. They're going to be making them with machines and robotics. And ultimately, that's the goal for every company, is to do whatever they can to eliminate jobs, to eliminate people. You go to Burger King, you go to McDonald's today, you order on a kiosk. Everything's done like that, right? That's just the world we live in. Mortgage rates climb back up a little bit. Some of the headlines. The customs started collecting tariffs on some products already. They've already collected a couple of $1 billion worth. But the big news, I think, also is Trump and Navarro shredding each other. Let's see. One of them, I think Elon Musk called Navarro a moron on his social media in public. That's balls to call somebody a moron on Twitter. So these are the things that are going on. Tomorrow, we wake up in a different world. We wake up in a higher cost world. And any products that reach a port as of midnight tonight and after are going to be subject to a big price hike. Anything that hits midnight and after in our ports will be subject to a tariff. So I hope this straightens things out. I hope my friend who's listening know that you are my friend. I don't mean to knock you or your thoughts, and maybe, the narrative that's being pushed out is wrong about how bad the tariffs are. And I see what you mean. We need to take steps to make the country a better place. and we really shouldn't pay so much attention to the stock market. We've got to do what's right for the country and not change course and use the stock market as a, you know, as like a polling thing. So whatever is good for the stock market, we're going to do. So I hear that, and I want everyone to know that I just want what's best for the country. I hope the course changes on tariffs. I don't think it will, but one thing we could see is a negotiation comes to fruition over the near term, and this could all go away. I think the damage from it, as U.S. as a consistent and reliable trading partner, will linger, and that'll take a long time to be fixed. But as far as the economy goes, and maybe getting better deals for America, it could happen. And I'm waiting to see it. I'm looking forward to seeing the results. All right, that's it. I'm starting to just repeat myself. We got a comment here. It looks like stock market Armageddon to me. Well, Satchmo, it is looking pretty bad. And if the tariffs are sustained, I think the United States goes into a deep recession. I think it could happen in a matter of weeks. And the stock market will reflect that, because they're going to have to see corporations mark down earnings expectations. You're going to have to see CEOs and CFOs lower expectations and maybe cut back on expansion, things like that. This week and next week, we start getting corporate earnings out, and we're going to really start to hear what CEOs and CFOs have to say about all this. And you're welcome, Satchmo. So we'll see what they say. It's going to be very interesting. It's all I can tell you, but uncertainty, nervousness, skittishness, all the words you're going to keep hearing over and over. If you have any questions, you want to know more about what you should do specifically for your situation, you are welcome to reach out to me directly, and I will see you tomorrow.